love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again! Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody. Good morning. Welcome back to another live stream. Hope you're doing well. And check this out, guys. We got a ginormous stock market move here this morning. We've got Broadcom up a whopping 17.5%. One of the bigger beneficiaries, as you will, of the AI stuff, right? AI trade, AI hype, the big winners, if you will, in that story have been things like NVIDIA. NVIDIA, by the way, up 1.3% here this morning pre-market. Broadcom up big here this morning. They had, I guess it was guidance. But anyways, people excited about Broadcom, which is pulling the NASDAQ higher here this morning. NASDAQ up 0.7%. Before the opening bell, just a testament to how bullish this market is right now. Stocks are higher here a little bit this morning. Yet the S&P 500 up 0.24%. Dow Jones not seeing the same kind of love, not participating right now. The NASDAQ has been the killer right now. NASDAQ has been just on fire. Does not seem to want to even take a break. Just up almost every day. S&P 500 has done really well, but the Dow Jones has not been doing so well. You can see the Dow Jones of the three has been the loser in the last week or so, seeing a pretty steady sell-off, dragged lower by the big story in United Health. A lot of speculation on this company. This is a ginormous, insurance company. Or healthcare company. And the reason I bring that up is that, this is dragging the Dow Jones down because the Dow is what is known as a, it's not market cap weighted. It's, oh shoot, I can't think of the word. Basically, it looks at the actual stock price in its weighting, and UNH has a very high stock price. So it actually plays a big role in the Dow Jones and seems to be one of the dragging forces, if you will, on the Dow recently. Dow has pulled back pretty sharply. Again, like I said, multiple 1, 2, 3, 4, 5, 6. This could be the 7th day down on that Dow Jones pullback. And meanwhile, the NASDAQ is undisturbed. Technology continuing to push higher. Here's XLK, the tech ETF, powering higher here recently. And we're talking indices here this morning because they're on the move. Gold's also on the move, down 0.7%. Silver's down 1.3%. The metals are getting beat up here recently. And part of the reason for that is I think possibly the dollar strength that came in recently. You also have bonds. How are bonds doing this morning? Bonds are lower here by another 0.3%. TLT is the reference that I'm looking at. And it's because yields are climbing again. Yields climbing off of the back of the higher than anticipated producer price index numbers that we saw yesterday. lots of movement happening on this Friday. Hope everybody's doing well, by the way. As we get started, if you could do me a big favor and just hit the thumbs up button on the stream, I'd greatly appreciate it as we close in on the Friday trading action, see what's happening out there in the world. I'll tell you what, this NASDAQ has honestly been a little bit frustrating for me to watch. I like the NASDAQ. I want to be a buyer of some tech names, but the valuations have gone just parabolic here. And it's one of those things, you wake up every day and NASDAQ seems higher, and that doesn't go on forever. So I do want to just issue a word of caution when you see this stuff. Right now, you're seeing just everywhere bullishness on everything. And again, I know that I sound like a broken record because I've been saying that for weeks now. Just crazy out there. I mean, if you're riding the trend, then fantastic for you. For me personally, if I was in the NASDAQ, I'd be trailing a stop on this thing because, again, we don't know how far this is going to go. It could keep going for a couple weeks, could go up for months. But for me personally, I can't really justify buying at these levels because the risk to reward just doesn't quite make sense to me at this time. If you get a bigger pullback and I can get a better risk to reward structured setup on these indices, then you might see me partaking. But right now, I'm pretty cash heavy. I'm pretty on the sidelines with my positions. I do have some metals trades that I'm looking at. I've got a sell put on silver, which is not looking too hot today, but wouldn't mind if silver goes lower, picking up a little bit of silver on that side. Gold looks like it had a good thing going, but fizzling out, losing its steam here as you get up into the 2700s. Gold can't seem to hang out. Gold seems to be struggling here. And again, with that higher than anticipated producer price index number that came out, it is expected that Fed rate cuts, you may get one in December here, which is very likely. But then the question is, what's next for gold? I mean, if they don't cut rates very much next year, it really hurts the story for gold. Gold looks a little less attractive. How do we know that the expectations for rate cuts are diminishing? This is a chart I told you guys to look at yesterday. Remember, 10-year Treasury yield? Keep this on your radar because, again, when this is rising, that's telling you that expectations for Fed rate cuts are diminishing. When it's dropping, rate cuts, easing monetary policy is more likely. So we'll see. UNH, again, a big story here recently in the stock market world. I talked about this. It's amazing how the actions of one individual can bring down a stock. Yeah, I mean, really sad news, regardless of how you feel about, healthcare and all that stuff. I think that, when it comes to violence, that is obviously never the answer, and a sad thing, regardless of how you feel about it. I do think that, just carefully speaking on this subject, the healthcare world has been under fire here recently because a lot of people, I tell you what, a lot of people don't like insurance companies. A lot of people don't like the food and drug stuff. That's been a real big drama point on Capitol Hill, Congress, lots of arguments over there and expectations that potentially the change of leadership could come real hard on they come down hard on the food and drug world, the insurance world, the healthcare world. I don't know what we'll see. Maybe we'll see some craziness. I think 2025 is going to be an interesting year. So we'll see. But I think UNH is also coming down because there's a little bit of and this is not my thought process, but something that I picked up from a CNBC talk show yesterday. Somebody was making the point that the Doge boys, aka Trump and Elon, love to earn the popularity contests by getting retweets. And one way that they could potentially get retweets is going after companies like UNH, which make a ton of money. And people don't like companies. People don't like insurance companies. They don't like companies they feel are predatory in any way. And so I don't know what's going to happen with that front, but UNH dragging the Dow Jones down seems to be a hefty weight recently on it. And, yesterday, take a look at the RSP. This is the equal weight S&P 500. Even though the NASDAQ and S&P are looking green right now on the market cap weighted side, what has not looked so good is the RSP, which is the a measurement of how the actual average S&P 500 company is doing. It doesn't apply extra weighting to Apple, right, which has been dragging the index higher, right? Take a look at Apple and you can see, I mean, this company has done really exceptionally well, which drags the whole index higher by itself. Whereas in the RSP, Apple is just one of 500 companies with no extra special weighting. So I think that, the RSP has been a more accurate indicator of how it is a more accurate indicator of how the average S&P 500 company is actually doing. I mean, this is a bit of a pullback, right? Not a huge one. RSP is down 3% from the highs. And, I've gone out and said I think that the market has room to pull back. I think it's very due for a correction. You know what? This year, we have not had, you guys want to, let's do a study. The biggest pullback this year, all year long in the S&P 500 happened right here. And at its peak, just about a 10%. Now, in terms of intraday, it kind of depends how you phrase this. Did we ever actually get a 10% pullback? Well, you could say yes on a technical basis, but this volume right here was very, very weird. It was all like pre-market stuff on that August 5th slip lower. So technically, yes. Technically, yes, we had a 10% pullback. But on like an actual intraday trading concept, we really only got to around 9. So my point is, a 9% pullback in the S&P 500 is really a docile year, right? Because if you think about, let's go take a look at 2023, for example. Let's wind back to 2023 and let's say this was still an exceptional year. 2023 was an exceptional year, one of my best trading years ever. During this year, right, you had an incredible run up of 25% in the S&P 500. We've had 2 back-to-back exceptional years. But even during this time, you had a pullback of 11%. Right? So you had that one-time pullback. If you take a look at 2022, you had a very large pullback, 26, 27%. My point with showing you this is that I think that we are due for some sort of longer, more sustainable bearish period. I'm not saying that I think that that's like we're going to enter a new paradigm where we're just bearish for months and months and months, but I think the market is due for a pullback. I'm not short. I'm not, you could hear me say I'm a little cautious on the markets, but I think it's a little bit different than saying I'm just outright bearish, because if I was outright bearish, I'd be picking up massive short positions, which I'm not. I'm just pretty cash heavy, waiting on the sidelines for larger pullbacks that I think are due for the market. Yeah. So anyways, we'll see. NASDAQ, as I say that, is pushing up, almost up 1% on the day. Again, helped higher today by Broadcom, which is just going parabolic here, up 20% on the day. That is an exceptional chart right there. And probably SMH making a good push here today as well. Take a look at semiconductors, up 2.6% on average. That's a strong push. So we'll see where that goes. Taking a look at the dollar at the same time, dollar index up recently here, a bit of a push off of this 106 area. We'll see what happens on that front. Take a look at euro dollar. Again, I mentioned the other day that euro dollar's chart looks really rough in my view. So still kind of a rough chart there for me. In terms of top setups, let's take a look at what we are looking at here today. So current readings, we've got a bearish reading on bonds, which is really interesting. What would a bearish reading on bonds entail? Well, it would mean now this is the 10-year treasuries. Now remember, for bond newbies, bond prices and yields move inverse from one another. Bond yields, which are moving higher, would suggest that bond prices are moving lower. My favorite bond ETF is TLT. So if I'm looking at TLT, This is an idea that, again, 10-year treasuries, bearish price action, so bearish TLT. So TLT might be a trade to look out for. At the same time, we've got NASDAQ bullish readings, Nikkei bullish readings, EuroCAD, copper, Euro Aussie. Let's look at commodities here for a second. Take a look at copper while we're speaking of it. Seemingly struggling here at resistance, trying to get a move here going, but copper's not looking too impressive, especially with the Chinese stock market coming back. I had this big pop, this big trade popped in my favor here. I did sell calls, which is making money, but then price coming down here, almost back to my break-even point. A little disappointing. I mean, this has been the theme with Chinese stocks. My goodness, man! Like the last few years, you get these pops on ideas of Chinese stimulus. Oh, we're gonna get serious about it, and then just these fading moves. So Chinese stocks have been a little frustrating to work with here recently, but we'll see what happens there. Chinese stocks are really important to watch because the state of the Chinese economy really will impact metals. So if you're somebody who watches silver, copper, oil, gold, you've got to watch China too if you're a fundamentalist, because again, the state of the Chinese economy can dictate the demand. Since it's such a manufacturing hub, it can dictate the demand for these raw commodities. So just something to think about. Let's do our daily check of the put-call ratio. Put-call ratio is still very, very low. Crowd sentiment is really bullish on a lot of stock market stuff, right? Crypto still really exciting to people. And not to say that it can't keep going, but again, it just makes me a little cautious when I see everybody really bulled up on markets. I too am bullish, but I like to wait for a more balanced market, right? PE ratios are off the charts for a lot of companies. You've got really exciting stuff going on in the stock market world, like ServiceNow, for example. This company's gone parabolic. You got things like Palantir, you got Carvana. These are companies that are priced just astronomically. You guys want to hear the PE ratio of Carvana? It's 29,875. That's insane. So there's a lot of stuff out there that's just priced like a madman. So I'm just a little bit cautious on the market. Valuations are not necessarily a great timing vehicle, just like sentiment is not a great timing vehicle per se. But it does make me a little bit too cautious to start chasing anything on that front. There's just other trades that I'm more interested in at this time. I'm watching gold. I was looking for this break and retest idea on gold to play out. Didn't quite get it. So just going to stay on the sidelines on that. I've been putting out some analysis in the meantime in the Telegram and Discord channel. By the way, if you guys would like to join the Telegram channel, we'll drop the link here in the chat. If you'd like to get daily ideas sent to you from myself as well as Frank, we do kind of a newsletter via Telegram. If you'd like to join that, we'll drop the link. It is free to join. Just been dropped in the chat. Yeah, so let's see what else. I haven't looked at COT data this week. It's been off my radar this week. Let me take a look at that. So if I take a look at, I thought this was interesting. There was some big Japanese yen buying that went on. So they bought the Japanese yen pretty heavily. Net change was pretty big. They decreased short contracts pretty dramatically and went long the Japanese yen, which I thought was really something interesting. They also really did some gold buying out there. Check this out. Institutional money added long contracts to gold and closed short contracts pretty aggressively as an aggregated number. Our software just lets you visualize where that's at. Gold is still very bullish. Institutional money seems to really still love their gold long positioning. So definitely worth keeping an eye on this today, because later today we'll be getting a fresh round of COT data. Comes out every Friday. So we're going to get that data here today. It'll be updated in the software if you have the Edge Finder. If you don't have the Edge Finder, you can try it out. We'll drop the link here in the chat for you to try the Edge Finder for 30 days. If that is something that you're interested in getting more information about, please take a second to fill out this application that we will drop in the chat for you. You can also find it in the description down below. If you're watching this live stream at a later point, try out the Edge Finder. It's a good time to get set up with the trial. You got the weekend, so you can play around with all this data and see how it can start helping you in your trading. Really interesting. Look at that NASDAQ pumping here into the open. My goodness, man. Look at that. Up 1.2%. That's an all-time high for the NASDAQ. S&P 500 not partaking nearly as much. And look at this. The Dow Jones is flat on the day. There is some serious divergence going on in the stock market right now. You've got, I bet you if we look at the heat map just really quick. Oh, it's not updated just yet, but let's take a look at it here. You've got, look at that, SMH up 3% here today off of the Broadcom news. Earnings were exciting to the market. Software's flat, interestingly. Technology and semiconductors are up. Everything else today is actually lower. Interesting. Utilities are up a little bit. I did actually pick up a position in utilities. I have a long position on XLU. But look at that NASDAQ just ripping here. My goodness. I'm feeling the FOMO on NASDAQ, guys. I don't know if anybody else is, but yeah. Really crazy to watch this thing. Just unrelenting upside move. Congrats to anybody who does have long NAS positions. I mean, this has got to be one of the crazier years that I've ever seen for NASDAQ performance. But, you know, it's give and take. The NASDAQ gets crushed the hardest usually in down markets, as technology is priced very expensive usually relative to other sectors. So when there's a downturn, when there's a recession, when there's, you know, tougher times, the NASDAQ has a really, really big sell-off. I mean, if you had bought the hype, you know, too late in 2021, you're looking at 38% drawdown. That's nothing to, you know, scoff at. That's a big drawdown. You know, just to put it into perspective, if we were to see another 30% drawdown, and that's not something that I am necessarily saying is going to happen, but let's just assume for a second, that would put us way down here. Just for context, that's back to 13,000 on the NAS. I don't personally see a 40% drawdown on the NASDAQ coming at this time, but even a modest one, even a modest pullback, the NASDAQ is just more violent than the others, right? 10% correction is kind of frequent, kind of normal. Back in August, the NASDAQ saw a 17% pullback. So even in this, you know, exceptional year, NASDAQ can get some pretty aggressive sell-offs going. Don't FOMO, Nick. Oh, don't worry. I've done this a long time. I know FOMO is it's like an itch that's you know, people get really caught up into the FOMO. And the problem is people that to scratch that itch, they give into FOMO, and sometimes it works. That's the issue. Like if you were to go buy the NASDAQ today, it might be up here next week, and you might be like thinking you're a genius. But the problem is you start building this habit, you start buying, you start chasing things because they're up. And when that dynamic shifts, when it changes, again, it can be devastating. A lot of people in 2021 got destroyed chasing stuff, right? 2021 was so hype. A lot of people got, the other one that's common is cryptocurrency, right? People got caught up in the hype of cryptocurrency back in 2021, lost a lot of money during the fall off that happened. So, you know, when you have these ginormous run-ups, they can continue for a lot longer than people think they can. However, I've been around for a little while, and I just know FOMO is a really nasty lesson for a lot of people. You feel like a hero until it changes, you know? So, I mean, not to say that, again, stock market could keep going, but for me personally, in my trading, I got to see pullbacks. I have to set up, I can't really get a good risk reward trade going at these levels because my stop loss, has to be pretty large. Whereas even just a pullback to here, that same trade looks a lot better to me on that front. If I'm gonna, buy a pullback to this level, right? If I look at my risk reward, it's really bad here, but I get a better trade idea if I can get a pullback. So pullbacks to me are just, it's the bane of my existence is when the market's just going up and up and up and up and there are no pullbacks. It really stinks to be on the sidelines. But you just have to remember trading is a lot of waiting. It's a lot of waiting and let people play their game, let people chase, let people do their thing. And in the end, if you're going to do this for the next 10, 20, 30 years of your life, you have to put into practice like principles that are going to keep you around. You can't chase, you can't risk like an idiot, right? You have to trade responsibly. It's the only way you're going to be doing this in 10 years. I ask myself that all the time. What methods, what practices can I do now that are going to increase the probabilities that I am still trading and improving in 10 years' time? It's really important to think about. By the way, guys, again, I mentioned it earlier, but if you'd like to try out our software or join the Telegram channel, or actually there's a whole bunch of free stuff available down below in the description as well. If you'd like to try out the Edge Finder, check it out. Click the link, try out the Edge Finder, apply for it here. If you're serious about getting into fundamental analysis, we've got that available to you as an option to try it out, or you can join our Telegram channel. We got a bunch of free stuff available in the description down below as well. And what we're going to do now is we're going to take 2 seconds. We're going to take a quick break. And then we've got Kenzo from Extra Hot Forex coming in to talk some charts with us today. Stay tuned. We'll be right back with Kenzo just after this.
Shopping for presents this holiday season can be stressful. What to get for mom, what to get for dad, grandma, your uncle. It's all just too much. Lucky for you, A1 Trading has the perfect product for everyone on your list. Introducing the A1 Stock Box. Let mom keep up with all her favorite brands like Lululemon. Dad can keep up with his reading by checking out the latest headlines. And everyone knows grandma loves hedge funds. She can keep up with what her favorite hedge funds are buying and selling each quarter, and even see what percentage of their portfolios are diverted into what stocks. There's something for everyone in the A1 Stock Box. Available now at a1trading.com.
All right, and there you go. Welcome back, Kenzo. How you doing, man? Good to have you back on the show.
I'm doing great things and you, man.
I'm doing well. It's good to have you here. And just in time, we had a really busy week with the CPI number that came out, the producer price index number, showed a little bit of higher than expected inflation here this week. And then NASDAQ ripping up 1.16% here again today, seemingly unbeatable right now. What are your thoughts on all this? Is this set to continue, or are we due for a pullback? What do you think on indices?
Yeah, I think one way or another, we might expect a reversal here and there, especially going to actually a new year. Obviously, it's festive season, people are spending, or investors are, let's say consumers are spending. So most companies that are inside NASDAQ, obviously they are benefiting something. But a pullback along the way, it's necessary. I don't think, even if things are good, one way or another, we're going to get something like a smaller reversal. People, they will be taking their profits here and there. So, but it looks like the companies are doing great. Even though inflation is still pushing higher and there, maybe it might be seasonal because now it's festive season. Maybe it's because of that. But yeah, the stock market is doing very great, and I'm still expecting some serious push.
Yeah, and you've got some big news out of a major player, ticker symbol AVGO, Broadcom, put out their earnings. And although missing on revenues, they beat their earnings estimates. I guess they had good guidance going forward. And it really excited the NASDAQ and other semiconductor companies, which, of course, Kenzo, have been a huge part of this rally, has been the AI story. And some of the biggest beneficiaries of the AI story have been the ones offering the picks and shovels, if you will, the semiconductor trade. Well, semiconductors have not done exceptionally well recently. Nvidia's taken a break, but big pop here today off of Broadcom's numbers, and that got the market interested. What I think is really interesting, Kenzo, here, and this is my question for you for on the indices before we'll move on from that. You've got NASDAQ up 1.1% and just indestructible, it seems, right now. Of course, we know that won't last forever, but up and away. Meanwhile, the S&P 500's up a little bit, but look at the Dow Jones, look at the Russell. These other parts of the market are not doing nearly as well. In fact, today specifically, and really the last few weeks, it's been the Magnificent Seven. It's been the really big companies, Apple, Amazon, Nvidia. Well, maybe not so much Nvidia, but you get my point. The ginormous names have been doing really well, but today specifically, it's semiconductors that are doing well, it's technology that's doing well, and everything else is kind of on the sidelines, right? You've got other companies, other parts of the market not doing really well. My point is, do you think that this NASDAQ outperformance is set to continue, or do you think that, the other areas, the other ones, Dow Jones, S&P, Russell, do you think they'll take a turn and maybe NASDAQ will cool off? Basically, what do you think, NASDAQ or others going forward?
Yeah, on that is a bit confusing because mostly they move in a quite similar direction. But I think Russell and USD, when we see inflation goes up, mostly they tend to panic. But I think they might end up catching up with Nasdaq. We might see them reverse very quick. It might not really happen this week, but maybe they will actually try to catch up with Nasdaq, or Nasdaq has to catch up with them as to reach whatever level, then before selling off. Mostly, they will end up actually correlating along the way. Sometimes they move. They actually move. They don't really move in the same direction along the way, but at other times, or most of the time, they will end up catch up and start to move in a quite similar way. But at the moment, it seems like things are mismatching. But yeah, we'll have to wait and see which one is going to follow which.
Yeah, it's a bit of a. The question is the NASDAQ? Are the others going to catch up to the NASDAQ, or is the NASDAQ going to catch down to some of the other names? I mean, you've actually got a lot of weakness coming out of the Dow Jones here recently. You've got the Russell. I mean, take a look at the Russell. S&P's, the most diversified of the list and kind of just sideways here. NASDAQ, of course, is very tech heavy, which is why it's having such a good run here recently, especially with Broadcom and some of the big names reporting. Just really interesting, the divergence there. We'll see what happens with the indices going forward. They do still look very strong, but in my view, I think they're due for a little bit of a pullback. I think the NASDAQ has had a really good run. I'm not shorting it. I don't think calling the top is a very smart thing to try and do, but I do think that I think the NAS is due for a pullback. I think it's possible that you do see the NAS catch down to the others more so than I think the others will catch up. I do think that at some point, as you pointed out, the correlation will probably tighten again. Right now, we're seeing some divergence between the two, but
yes,
we'll see how that plays out.
yes. Yeah, we have to wait and see. And unfortunately, if you missed maybe Nasdaq at the lowest level, obviously you can try to catch it now. So the best thing is to just wait and see. So the other ones, I think they are at the good stage. If maybe they will be reversing, that will be good. But for Nasdaq, I think you can't just jump straight to that. But USD, if it's going to try to catch up with Nasdaq or try to go back to that correlation, obviously this is going to be a very good one to look at. But at the moment, one way or another, I think we can say Nasdaq is overbought, even though maybe it might still continue, but it's overbought to a point where I'm expecting maybe a sell, maybe next week or something, especially when we have interest rates coming. Let's hope that after whether they're going to cut the rates or not, let's hope that the conference after the rates is going to be positive. But if it's going to be negative, we are going to see some serious sell-offs.
Yeah, and again, we'll have to watch those and see what happens with that. What about gold, Kenzo? Gold's taking a break here, it seems. Came up to that 2,700 level once again, knocked on the door, and seeing some sell pressure. Gold just cannot seem to catch a break here. Arguably, some of the sell-off here is due to the producer price index number coming in a little bit higher than expected. Inflation concerns kind of still showing some stickiness, takes the fun out of the rate cut story a little bit, right? We've seen that in yields. Take a look at yields quickly. You can see yields are back on the rise here. That's leading to the dollar's strength. And that, of course, puts some downward pressure on gold, which, of course, really wants to see more rate cuts from the Fed in order to really get ripping and rallying, either that or geopolitical concerns. But it seems like both of those stories right now are just not very strong. Do you have an opinion on gold? Are you looking for bullish setups? Are you bearish on gold? What do you think?
Yeah. Actually, I was actually looking for a continuation of that bullish move, especially with the tensions. But along the way, I think once the dollar gets stronger because of those inflations, one way or another, that most of the time gold will suffer from that strength. So, it seems like that it's happening. But besides that, I think this was also an obvious area where we can say the market reached a level that we can say maybe it's a resistance. Now we see that sell-off, which I think we were waiting for. Now the question is, where can we say the market will find a support, maybe this low or something like that? But the most important thing is going to be what will happen, especially on the news events that we're going to receive from now on. But most of them, they seemed to be in favor of the dollar. But if tension still continues, I think we're going to have a mixed market where gold will just end up consolidating. But yeah, I think at the end of the day, after maybe let's say next year, which is like 40 days or something like that, I think one way or another gold will end up selling as the dollar is gonna get stronger and stronger. We see it happening now, you see.
Sure. Yeah, no, I mean, and that's the thing about gold is it was doing so exceptionally well this year. I mean, it was doing just remarkable and has really slowed down towards the end of this year. I think a lot of the crescendo effect that we had here was leading into the election. People uncertain of how that was going to go and which way it was going to go and whether or not it would be a peaceful pass of power. You know, people had those questions, and that question being answered, I think, was a big one for gold's kind of price. So I think we're now just consolidating, trading sideways. I personally wouldn't mind the idea of actually buying some gold if it were to really go lower, but not necessarily from a short-term trading perspective, more of a longer-term kind of buy and hold scenario. Not necessarily buy and hold, but buy and look for a push higher, maybe dollar cost average. But for now, right now, I see gold is just very indecisive. Can't quite get going above these levels and can't quite seemingly commit to a sell-off either. So I don't know. We'll have to see how that plays out. And last one for you today, Kenzo. Bitcoin up 1% today, back up to 101,000. It seems like it's really, it was really going with a lot of momentum here and now has gone sideways. But it seems like investor enthusiasm still being overall decently high is keeping things like Bitcoin and Ethereum. I mean, Ethereum has been actually doing pretty well. Meanwhile, Bitcoin has kind of gone sideways. Any thoughts on crypto? Any trade ideas here or looking for breakouts?
No, at the moment, I think most of the major cryptos, I think they will end up pushing even higher, especially with this team up of Trump and Musk. I think they all in favor of cryptos. So I think I will be going more on cryptos. One of the two or three, then I will have to check them. But I think going next year, we will see some extra push to the upside. It seems like things are going to look good for cryptos, especially if maybe they can relax or the regulations around crypto. That will be a very good thing. Or let's say crypto likes that. So I think, yeah, I think we will see some aggressive push later on, even if maybe it's not going to be aggressive as this. But since some of them are still very affordable, some of them obviously they will boom. But maybe the likes of Bitcoin, Ethereum, XRP, whatever, they're mostly saturated. I don't think they will just blow up very quick, but I think they will be on a bullish momentum.
Yeah, and again, it kind of rides the curtails, if you will, of the Nasdaq and the hype, and just in general of the market. So, again, very very curious to see how Bitcoin. I mean, if you're feeling really confident about the market right now, which uh, I would warn is the very very consensus thing. That's the crowd sentiment right now. Is markets are going to go higher and higher and higher. That's why Bitcoin's up so much. And if you do believe that that is going to continue, then hey, Bitcoin may be a trade idea for you. Um, and I don't hate that idea. I mean, the market looks so strong right now, but at some point, these things will have larger scale corrections and pullbacks. My opinion on it would be, even if I'm bullish on Bitcoin, I've got to put stops on the trade, right? I've got to know where I'm going to say I'm wrong. Didn't work out. Maybe this is reversing. So just something to think about is, when you're in this highly risk on environment, it is very easy to get caught up in the excitement, caught up in the hype. People are out there, talking about new cryptocurrencies. I saw a cryptocurrency today that was Giga Chad, which just sounds funny. So you got crazy names coming in for everything, and feels like we're back in 2021, which does make me a little bit nervous because many of us will remember how ugly it got for the crypto world in 2022, and for unprofitable tech stocks. Remember, Kathy Wood was really popular during that time, and so just my word of caution to those out there who are feeling the FOMO, feeling the caught up in the excitement that we're seeing in the markets right now.
No, you're right, man. I think it's that time where you have to think twice, and sometimes you might feel like you're missing out, because when you check most of these coins, some of them is like 50% plus within a day or two, and you feel like, whoa, if I did put something here, I was going to make something. Or maybe some other people, they show some serious profit. And unfortunately, there is these different names that some of them we never heard of before. So they sometimes pump and dump. So they hype everything. You go all in, then they dump everything, then you go back to zero. But people who knows, obviously, they took whatever they want to take, and they
Yeah.
then disappear, unfortunately.
Yeah, no, you're
So
exactly right. That's a very common thing, unfortunately, in the crypto world. Is there's so many, kind of sketchy, scammy things that occur as well. So just a word of caution to everybody out there with the crypto stuff, as well as just in general, don't let these hype moves that are happening in the markets get you to chase things. I mean, Kenzo, I think you and I are both, generally speaking, bullish on indices, and we've been bullish on indices for quite some time. But that being said, it does not
yes.
mean that you make irresponsible decisions, buy too high, put too much leverage on. It's very easy, even in a bull market, to still mess it up by being overly risky, or chasing bad price action setups because you feel like it's going to keep. You've got to really, as a trader, have that patience. I know you hear it a million times when you're watching social media, but it's so important that you take the trades you're supposed to take, not just take a trade because it looks like it's going to keep going today. It's so exciting. You know what I mean?
Yes, you're right. Unfortunately, in trading, it's like that because we mostly rely on our emotions when we take decisions. And sometimes when it comes to stuff like this, we don't really have to rely too much on our emotions. You have to have that plan. And when you have the plan, it helps you not to just do things the way you feel like they will actually go. You have to have a plan that will help you to reach whatever that you want to reach. And just because the market is on an uptrend, it might be on uptrend for 12 months, but it doesn't really mean it's a buy. It doesn't really mean everywhere it's a buy level. So
Yeah.
along the way, it will sell. That's why they say, even if we are on an uptrend, you still have to buy at the lowest level. So along the way, the market will create those trends, but those trends, they have the lowest levels that you can actually buy. It might be on the higher level, but still there is a lower level that you can point out where you can buy. And
I like that.
unfortunately, we don't wait longer. We lose patience because you already identified the structure as a bullish move or uptrend. Then just because the market doesn't reverse up to a point where you want it, you just start by buying. Then it sell-offs. Once you lose everything, it bounces back again, which means you were not wrong, but you were wrong at the time you, or where you placed your level, where you placed your positions. So at the end of the day, you end up being greedy because the market moved the way you wanted, but not at your own time. So if you learn to wait, that can help.
Well, and you said something, Kenzo, there that I just want to point out to the audience I thought was really, really wise, which is just because you're in an uptrend does not mean it's a buy. That's a really, really good point. When something is trending up, like
Yes.
when it's ripping higher, you look at the NASDAQ, it does not mean, just because something in an uptrend does not mean it's a buy. Obviously, I'm going to do a little hindsight picking here, but in this uptrend, the points to be buying are the pullback periods, because look at the risk to reward in these upward trends were much better, much greater in these areas than had you chased. The risk to reward was not as good, right? So, it's very, very good point. When you're in a bull market, yes, buys are probably going to be working better for you, but even then, you don't want to be buying just because it's in an uptrend. You still want to wait. You still want to be looking for decent timing entries. Even just employing a little bit of timing could really improve your risk to reward on some of these ideas. So really like that idea. When you're in an uptrend, doesn't necessarily mean you buy. You've still got to wait for the right setups.
That's great, man. Yeah, it's just like that, man. Unfortunately, people have to learn, and it's not really easy. Learning how to manage money or trading is quite difficult. So that's why you just have to go there every day, try to master the skill, which is not really easy because it takes time. Even if maybe you mastered some other things, you're still gonna mess up. So yeah, you just have to go there, prepare yourself every day. So yeah, that's how it goes.
Yeah, no, really, really, really important stuff. And Kenzo, I want to, of course, it's Friday. We got the weekend right around the corner. Thank you, of course, for spending some time with us. I know for you, it's Friday evening. So thank you for coming on the show here today and sharing some ideas with the audience and with me. It was great to have you on. And before we do let Kenzo go, everybody who's watching, make sure to go subscribe to Kenzo's YouTube channel, Extra Hot Forex. He puts out some great content. So I'd encourage you to take a few minutes, go subscribe, go check out his content, leave him a comment, let him know you came from the A1 Trading Show. And Kenzo, we really appreciate you coming on today to share some ideas on the markets.
Thank you very much, man, and also your viewers.
All right. Thanks, Kenzo. We'll see you next time. Kenzo's one of my favorite guests to have on each week. Very, very smart dude. Very good with both fundamentals and technicals. And today we got a dose of some wisdom from Kenzo. That was a great, great point. Really liked that idea. Good stuff. Russell is an interesting area of the market too. I've been watching the Russell here. Interestingly, because you've got the NASDAQ pumping higher, technology, we get it, it's doing incredible, but then you've got parts of the market that are just not doing as well. Take a look at for example, let's filter here. You've got here's regional banks, some of the higher risk stuff out there not doing as well. Take a look at energy, has been doing real poorly here recently. Real estate's given back a lot of its gains. Healthcare has done horribly. This is the interesting part about the financial, the stock market side of things, is stocks can be a little bit misleading sometimes when you just look at the index level, simply because the index level can be really helped by a small section of the market. Here's semiconductors and tech, which are up quite a bit. Consumer discretionary doing extremely well. These are companies like Amazon and Tesla and Nike, companies that people again, discretionary spend. Those kinds of companies have done very, very well. Consumers been doing a little bit better than they were a couple of years back. So just interesting to keep an eye. I really think that if you're an index trader, you should add sectors to your watch list. I actually trade a lot of sectors. I currently have a position long XLU. I like this setup quite a bit with the stop loss below. I put this inside of the Discord. If you'd like to trade sectors with me, it's actually something that I trade frequently. I trade actually a little bit of everything. I've taken on the Chris Pulver approach where he trades everything. I do as well now. I mean, I have, but I've really started sharing it more with the community. Every trade that I'm taking. I went long XLU the other day. I have a Forex trade yesterday that went really well. Dollar Swiss rock star trade for me, which was cool. Got some FX moves going here right now. Dollar yen didn't work out, but I cut it for a really small loss. I'm glad that I don't know what's dollar yen doing. Did I get out at a bad time? Let's go see. Dollar yen. No, I made the right call there. I was short dollar yen. I took a really small loss on dollar yen. And then picked up, well, I've been in a position in dollar Swiss franc. Dollar Swiss rocketed here yesterday. Wishing now I was still in the trade, but we took profits on dollar Swiss, which was great. I'm looking for an opportunity to re-enter that trade, possibly, if I can get it. Again, all those trades get shared in the Discord. If you're not in the Discord, by the way, two things for you. Number one, you can join our free Discord. We'll drop the link in the chat. And if you'd like to sign up, we'll do something fun. It's Friday. Why not? Also, can this get off my Discord? I'm not interested in that. If you guys would like to join the free Discord, you can apply for it right here to join the A1 Trading Discord community. The free Discord will get you access to some daily analysis charts and stuff that we're putting out. And if you'd like to join the paid Discord, if you're serious about this stuff and you'd like to work closer with myself, Frank, Ivan, Chris Pulver, and join the chat rooms and get access to every trade being taken, all of that is currently available. You can use the first link in the description, or we'll drop a link here in the chat to speak directly to a member of our support team. If you want to get a membership with us today, it is we have some one-time payment options. We have monthly options now. Again, we have yearly options. So if you'd like to join the group and you'd like some more information, send us a direct message on our website. We'd be happy to get you set up with a membership so you can come trade alongside us, see the trades we're taking. Again, we trade everything. We trade Forex, we trade indices, we trade commodities, we trade stocks and options. I took an ETF trade today or yesterday. I mean, we trade a little bit of everything. So make sure to come join us if you have not already. We've got some discounted memberships available for you if you're interested in doing so and joining the private group. Okay, guys, we're going to take a quick break. And then speaking of a guy who trades a little bit of everything, we got Chris Pulver coming on. He too trades a little bit of everything and will be sharing his ideas with you all in just a moment. He's going to be taking over the show. Our next host going live just after this. Stay tuned for Chris Pulver.
'Twas the night before Christmas, and all through the house not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night, I'm not really sure how he did that. Pulver alerts are now available at a1trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
Good morning, everybody. Happy Friday. So we had a 2 standard deviation move on AVGO or Broadcom. Nancy Pelosi just killing it this morning. So party at Nancy's house this weekend. Anyway, we're at 219.44. I looked at the pricing on this one. It was the average move on Broadcom earnings was 9.31, but the last 10 prints, we've seen a lot of 5% moves. Based on my calculations, I would have been calculating about a $9 move. Okay, a $9 move, and we jumped up $37. So that is like a 3 to 4 times standard deviation move. That's pretty wild. Now I say that at 5%, if I had given the average like it shows in my earnings at 0.09, so 0.09 times a closing price of 181 times 181, about a $16 move. It still doubled that, like more than doubled. So that is a crazy wild move on AVGO. I did take a trade on it this morning. I'm not taking this as this isn't a Pulver alert trade. I'm tossing the trade in as just a potential. There's no market maker levels above like 190 when this had a move. Like we expected to see like a 195 upside or like a 170 downside, and jumped up to 220. So I am fading this move today only. So it's not really a trade that I would recommend getting in. But anyway, I took the trade. So I did a bear put spread. So I bought the 220 put and sold the 217. I only had to pay $1.10 for it. So I'm going after $1.40 profit per contract. That return on capital is pretty favorable. So if I win the trade today, I'm getting 127% return on capital. But I need to see price, fade off of today's highs, which is around 221, and try to get back below 217.50 by close today. Also had a little winner on QQQ. I took a small loss in the SPX this morning. Price is pushing a little bit lower. We've seen a lot of gaps and a lot of chop this week. I do have a chart to share. If you're looking at some levels, okay? I'm going to talk about these in the charts in a moment. I spent an hour yesterday at my 3 p.m. live session on my YouTube channel doing this. If the SPY is getting below 600, or the SPX is below 60.18, or the ES is below 60.49, or the QQQ is below 515, that would be where the cracks are happening in the market. That's key resistance becoming support. If that support isn't offered and held, that's where I see the bears getting the upper hand this last part of the year. Now, we know the Fed's coming next week. The probabilities are still going to cut. Let's just zoom out for a second. All right. Coming into the Fed next week. Everybody can see this. So we have a previous high right here. That is either support or it's not. And so looking at this recent structure, when we had all these little tiny melt up higher, like 0.1% higher, 0.1%, oh my gosh, 57 all-time highs. Well, we just hit an all-time high again this morning on the QQQs. It was 530.64. Now it's 531.57. So the Qs keep going. A lot of that was thanks to Broadcom. The SPY, not quite there. The SPY has been playing games with all sorts of gaps this week. We had a Monday fade, Tuesday follow through. We ripped on CPI, hit the backside of the trend line. PPI to today, Thursday, Friday, really price hasn't gone anywhere. So whether we stay here for the day or we go a little bit lower or a little bit higher, I don't know. So long story short, there are some key levels to watch. The Fed coming into next week. If the market is going to bounce, watch for this low or watch for this low to offer some support. Okay? If the market offers support and we have a Christmas and New Year's rally, then perhaps we find it at a level support. There's buying interest to come back in, try to get back to these all-time highs, maybe squeak out another all-time high or so by the end of the year. Okay? Like I said, if there's going to be some cracks in the bull market, it would be below this level, in my opinion. So if we're below 60.18 on the SPX, if we are below 600 on the SPY, you can see kind of the similar take. Here is resistance, and there's my support. So do we have room? I mean, we're right in the middle. Fed coming next week. Is the Fed going to get this market at all-time highs again, or is the Fed going to see the market get faded? I don't know. Okay, what we do know is the probability remains very high that we're still going to see a rate cut. Like 90-some% this week was the probability, 96.7%. Even with higher inflation readings this week on CPI, PPI, doesn't matter. Fed's still going to cut. Okay, the press conference with Jerome Powell, it's going to be interesting what they say, what he says, rather. I'm sure he'll be a crafty veteran and just dodge all the direct questions. It's probably going to have something to do with employment, U.S. economy resiliency, inflation numbers. We're watching month to month. We're watching blah, blah, blah. Same thing as always. But what does price do? Whatever it wants. Okay. And I am regretting my AVGO trade this morning, despite the small risk, but we'll see what happens. Chart alarm still set. Otherwise, this thing rips. If the market finds a way to get to some fresh all-time highs, let's go to the Qs. I mean, the Qs are fading. So I guess I'd make a gamble this way. If the Qs fade to Thursday's close, then that might give me a chance on the AVGO trade this morning. Let's talk top down. Let's talk currencies. Let's look at our currency strength. We got Euro on top. What? Japanese yen a little bit weaker. Volatility wise on top and bottoms pretty light. Euro yen going higher this morning. Yesterday's currency strength, we had a big move out of the Swiss because they cut by 50 basis points, which is a pretty nice surprise. The Aussie held rates this week. The Bank of Canada cut by 50 basis points this week. The ECB cut by 25 basis points this week. The Fed and the BOJ on tap next week, Wednesday and Thursday, back to back within 24 hours. Those are two major central banks. That'll make 6 for this 2-week window with U.S. data out for the inflation readings. Market doesn't seem to care that we have higher inflation. Okay, maybe I do. All right, so yesterday I was a little bit, I was just talking like this is what I'm doing in the portfolio. I can't sit here and justify buying stuff at all-time highs. I mean, I put a trade yesterday in my Pulver Alerts on Tesla. And I mean, we're sitting here at 429. We're at all-time highs. It looks like I should just buy more Tesla. But I'm going to wait and try to get filled on some volatility entries. If we have a pullback or a test or a check of some sort, I'm hoping that we have some type of check back to this previous resistance. So the nice thing is my exposure on Tesla that's still running is like 99% probability of profit. So whatever I do show on Tesla is still running. SPX, here's Tesla right here. So year to date, $9,500 on Tesla. I haven't owned a single share this year. These are all option trades. What I have left is a bunch of very low dollar amount, like way out of the money, 99.5% probability of profit. Even to this one, 97% chance of profit. These are all ratio spreads that are still sitting on $3,000 of open positions. So when these close up, great. Nice run on Tesla. But I'm not going to buy these things at these highs. It's that simple. Like if I was still if I still had shares and I'm owning the shares, fine. I'd hold it. I'd trail it, but it's all options. And this just came up yesterday. Chris, would you put on like credit spreads right now? No, not right now. Because look, I was interested in owning shares of Tesla, like 100 shares or more in the 200 range. Now that price has doubled. I was willing to allocate about $10,000 to $20,000, $10,000 margin, $20,000 cash, willing to allocate to my portfolio. Now that's doubled. So I'm not interested in owning the shares. Now it's all options. Now what I am interested in as far as ownership is I set the dollar amount that I want to own. So rather than owning 100 shares, I'll just allocate a dollar amount that I'm comfortable with, and I can play the dollar cost average game. Okay. All right. There you go. Daniel killing it on NQ as usual. That's no surprise. All right. What else we got going on here? Let's go dollar, gold, silver. We are clinging to a slight gain on the SPY because of the gap higher, but that is a fractional showing 0.11%. Oh, I guess that's because of yes. I mean, the direction today is actually red. We have a close from yesterday's candle. We gapped higher. We faded that move. We might just spend the day sideways. I don't know. But if we end up taking out the low for the day, I mean, do we come back and revisit the low for the week? I'm just curious how directional today gets on Friday. I might look at another opportunity to put in a trade on SPX. If things kind of quiet down and look a little sideways, then I might put in another trade in SPX. Okay, but I'll keep an eye on it. I want to see some, kind of some chop going on, and then I'll put on a trade. Qs, all-time highs at 533. Wow, that's a pretty good run. Right out of the gates, hitting all-time highs, but you can see here kind of quickly fading. We go to the Dow. The Dow is break even on the day. Again, we are, total opposite price action. A slight gap, hit the lows, and we're back to flat. Russell is actually down on the day. So we were up, faded hard. So Russell and Dow are down. VIX, a little bit of upside on VIX today. Let me switch this back to the SPX. Let's go this way on the chart. VIX is still down on the day. We might see some VIX activity next week. We might not. I mean, the Fed has the power to open up the floodgates, give the market an excuse to move. I'm looking for, whether it's pure volatility and chop and the market doesn't really go anywhere, I would still expect prices to go somewhere between $5 and $10 higher in the SPY. So that could be 50 to 100 points one way or the other on the SPX. Match that on the NASDAQ. I mean, NASDAQ usually has like a 20% higher move than the SPY. So if you're trading the Qs, if we get a let's say a $10 move on the SPY next week, expect like a $12 to $13 move on the QQQ. So that's what the market likes. Is we've got noise next week with the Fed. Watch price. Jerome Powell's not going to say anything to really shock the market. It's doubtful. We're at that time of the year. It's either say as little as possible to let the market just still stay in this like euphoria state and let it keep melting up, or say something that's probably a bold-faced lie about how good everything is and try to encourage the market to go higher by the end of the year. But we'll see. And in addition to my key levels, where it's like if the SPY breaks below 600 or the Qs break below 515, I'm watching those levels. Also, going into 2025, if the 10-year note is going higher on the bond yields, or the 10-year and the 3-month become disinverted. Those are two big things that the market's going to pay attention to. On top of that, you've got higher inflation and you've got a jobs number that's starting to increase, or unemployment that's starting to increase. It's not going to be overnight. Like nothing's going to crash overnight. But I'm watching price, and I'm watching some key levels that would have a big impact on where this market can go. I do think that Q1 is probably going to be kind of more of the same. Q4 earnings are probably pretty strong. This market's had a heck of a rip this entire year. We've seen just tons of inflows post-election, and that momentum. And then there's still opportunities for buybacks, and there's still opportunities for mergers and acquisitions. Like there's a lot of systematic things that keep these bull markets going, and they drift and they run. And that's why the famous saying is the markets can remain irrational longer than traders can remain solvent. So if you're trying to short this market or fade this market, it could be months and months away, right? So if I am trading a short, I'm typically hedging with options, and it's usually, cheap. But otherwise, the melt up is good because my portfolio is typically tilted bullish in a bull market. All right, DXY. DXY has continued to do what I thought it was going to do this week, which is bounce off of support. You can see it on the 4-hour chart really, really cleanly, right at the 200 moving average. So we've been in a bull trend since that squeeze. So bullish trend, chance to buy right here. Pulled back again, chance to buy. Stop loss below. I said 105.50 is my line in the sand. It stayed well above it, right? 105.50, it's above it. So I think the dollar, possibly into even next week, is coming right back up to where it started there. Now, if it gets higher, there is a bigger pocket and inefficiency to fill. I would like to see if this dollar makes a slightly higher high and that becomes divergent. Does this get faded and actually set us up for a bear pattern going into 2025 with a weaker dollar? I don't know. Price will have to show this. Otherwise, watch for a range trade. Could be a range trade. The last time we've seen tops and bottoms on the dollar, it has been with a sideways move. Okay, if you zoom out, okay, you can see here, sideways move, okay, and the sharp bottoms have happened at support. So if we have a sideways move here, just be careful on your trades. If we end up breaking and going lower, or we end up breaking and going higher, there is room for this dollar to run. I would think that it kind of, this squeeze kind of ran its course. I'm just like everyone else, like, what is the dollar going to do, and what basket can I trade? My exposure on dollar is this. I'm Aussie dollar long, New Zealand dollar long, dollar CAD long, dollar Swiss long. So obviously, if the dollar goes up, my dollar CAD will probably continue to go well. My dollar Swiss should be going well. I might take a little heat on the Aussie dollar, New Zealand dollar, but they're all kind of built-in position trades for me. So I have the flexibility of letting price move. I've got, kind of, I'd say a few hundred pips of slack in those. So if I show the Aussie dollar really quickly, or I just show all of them, let's just show daily time frame here. So I would say this, the surprise move to me on the dollar would be, if we came back up to make a slightly higher high, but then we fade, that wouldn't surprise me, because I would expect that to either be sideways or maybe setting up some type of bear pattern where we have a range trade on the dollar. Okay. But think about this. This move on the dollar could also be the floor that's built in. If this is a B, and this market's trying to establish a C to D, that to me is the surprise move on the dollar. Now, there will be a lot of repercussions in the market. If the dollar does this and it crushes all these currencies, you're going to see this bigger push towards, getting off the dollar, moving into gold, moving into Bitcoin, getting dollar alternatives, because that is the milkshake theory. Like when the dollar gets stronger and it sucks up all this global liquidity, it makes things harder for emerging markets. This is why the US has been the best stock market in the world for the last decade plus. It's been outperforming everything. If you look at the markets, non-US, they suck. You look at the markets with US, they've crushed it. You look at the US markets, they've crushed it. Anyway, I don't know if that's going to happen, but I'd say the surprise move on the dollar would be if we break above this 108 handle and we clear 109 and we're going towards these highs. I mean, I would be looking for a top. I would be looking for a top right here, but not forcing that trade unless I see price action suggesting that we have a topping pattern. So a head and shoulders pattern is great. A rising wedge is great. A double top is great. But if I don't see that pattern, this thing just goes higher. Well, I'm also going to measure this, and this could be something wild and crazy. There's my move. There's my symmetry. Is that likely going to happen with Trump? Probably not. That guy, I'm pretty sure, wants to see a weaker dollar. I mean, I don't know. I feel like his measure of the economy is the stock market, which is not the real economy, And 2025 could be this: Main Street recession, Wall Street's fine, right? Wall Street keeps going higher. We're in this AI boom, right? AI is everything. You got everything that's in the semiconductor space, anything that's computing, AI agents, anything that's going to have, crazy amounts of margin, no people power. Everything can be done by humanoids and computers. Maybe that's our 2025 story. Okay. But if Wall Street does just fine and squeezes out another, 7, 8, 10%, 15, 20%, whatever it can muster up, if Wall Street has a good year, but we're still running at 3.3% inflation, 3.5, 4% inflation, Main Street's going to hate it. It's going to feel like a recession. Now, the consumer is strong enough to actually have a recession. Okay. But Wall Street may not really reflect that. We've had recessions in the past where stocks have gone up. That's a very real possibility. So anyway, I talked about a lot of stuff this week that could be if. I don't know what's going to happen. I'm just watching price like everybody else. So, all right, that's red on the dollar. Oil had a bit of a squeeze this week. We're still holding that floor at 67, and I am watching these levels closely. It is so surprising how quiet oil has gotten. I do think there's going to have to be a decision to be made. Now, saying that, like, we could still see oil just do this and get tighter and tighter and tighter until eventually and this is a real possibility. I could see this being a fake out and then a squeeze to the upside. I could also see this just going to the upside. Okay. If we're going to have a real break of oil prices, AVGO, let's go, baby. All right, let me see what he's doing. It's a DT trade in a second here. AVGO. All right, so I'm already up 30 cents on the trade. I think I'm just going to take, let me see if I can get out of here for $1.50. That would make up for my SPX trade this morning. See if I can get out of here for $1.50. Boom. All right, I'm out. I'm break even on that. I took a small loss on SPX, had a win on AVGO. I'm calling it a day for that. Anyway, so such a silly trade. Now, the point of this trade was to be, if I wanted to hold it for the rest of the day, as long as we stay below 217.50, I'm making full profit, which is $1.40. But if we start getting back up towards today's highs, I'm out. But I'm in for $1.10, out at $1.50 a contract. I'm taking the win, and fine, whatever. Yay me. All right, oil. Look, inflation's going higher, right? It's trending in the wrong direction. We've now seen 3 prints higher. We've had 40 plus months of CPI over 3%. That's the first time since the 90s it's ever happened. We have PCE going the wrong way. We have PPI and CPI going the wrong way, yet the Fed is cutting. We're right on the verge of that 10-year 3-month becoming disinverted. The 10-year yield is still going higher. So it's just, these things are not going the right direction. Look at this thing. Look at this thing. Okay. This is the bond market. This is the yield. This is bonds going down, yields going up. This is not good. I keep saying this. If we're getting greater than 4.5%, this market is going to take notice. I'm serious. Like, it may not do anything to really derail the uptrends right now, but if we start getting above 4.5%, and we start creeping up to 5, there's a bit of a line in the sand at 5. You know, if we don't buckle at 5%, we are going to crash at 6%. There is no way that we can have sustainable financing on anything if we are getting that much more expensive on major borrowing costs. Like, servicing our debt would be more expensive than Medicare, Medicaid, and the military. It's insane. So I don't know, man. This is kind of wild, but this is not a good jump. This is up, 5.6%. Crazy stuff. And I mean, obviously, the market's done the exact opposite since September. It's up. What is that? It's up again like 80 basis points. So just write it down, 5 and 6. Okay. I think the market can buckle at 5% and it will crumble at 6. So it just depends on if we get to one or the other. Neither one is good. But obviously, buckling is a lot worse than crashing. But both can happen. Who knows? I mean, I'm just trying to be optimistic here. It'd be nice to see this just kind of oscillate and then find a way into Q1 of actually going lower, but I don't know. The market's got to take some type of positive prints out of inflation, but we're not getting it. Okay. And market's fading pretty hard right now. SPX getting way more directional. Anybody in my daily profit play, I'm glad we got out. Okay. NQ, look at that, fading hard. Ooh, man, this is tempting. I want to get in here. Let's see. So ES is falling hard. That was where's my 930 candle? 10 o'clock. There's my 945. There's my 930. All right, there's my 930 candle. Right there. So we had a nice little breakout on ES. And there is my pop-up candle. We're breaking out officially. Ooh, okay. I think I might take an NQ trade this morning. MNQ. Let me see if I trade this. It's $2 a point. I mean, I'm probably already late to the party. Shoot. That would have been a nice, even if I took an MES trade at 68, that's up 16 points. This thing just moves like a ton. I mean, it's already down 150 points from that high. Ooh, we got some futures action. All right, ladies and gentlemen, let's see what happens. Are we going to break fresh lows for the week? Are we going to break fresh lows for the week? Remains to be seen, but this is a very directional Friday. I'm glad that I'm out with unscathed. I'll take it. This is also why I have hedges, by the way. So if we're starting to see some vol increases, I have some hedges. MES. Take a look at these real quick. These have been in the pulver alerts for the last week or two. Let's see. AAPL. What's this? Call. Hang on a second. What? Oh, yeah. Is this a covered call? Yeah, okay, it's fine. I was going to say, like, I did a roll. Okay, so I'm getting some Apple stock called away today. I was like, what's going on? I saw in the money. I'm like, what does that mean? Okay, so I have some Apple shares. They're getting called away today at 2:30. That's going to be, I lowered the cost basis down. I think I have it on my chart. Let me do a quick spot check on this one. Sorry. Got a lot of stuff going on today. Here it is. So 227.73. This is a pulver alert as well. I did one roll on this trade, so I put a roll in. So I did the 227.73. I sold a 230 covered call for 475. That brings the cost down to 223.35. It's getting called away today at 230. That gives me $6.65 of profit. So per account, I've got $665 times 9. That's a nice little grab on the week. Another income trade. Didn't have to chase this thing to all-time highs. I still have some shares that I own at 175 that's rolled out into March of next year. But this one is a nice little income trade that worked out just fine. Google's had a nice run this week as well. Amazon hanging out at these highs. I probably need to buy some protection on this one. I did some rolls out to March. Microsoft hanging in there. Meta is up there. Netflix fading off all-time highs. I was going to say YouTube. I feel like I have a personal victory this week. I'm canceling YouTube TV. They're up in the price again in January. I started YouTube TV at like $49.99 a month, and now they're going to up it to $82.99 a month. What is this? Is this like DirecTV after a promo period? Come on, man. So it's not worth it. I barely watch TV, let alone live TV. So I like the unlimited DVR, but it's not worth $83 a month for me. Anyway, let's keep going. Nice little win on Apple today. That's good. What else? My futures hedges. That's what I'm looking for. Okay, so I have gold futures still looking very good. MES, this is the one I'm watching. So if we come back down to the lows, this is up 40 points. This one's out. These are all to the end of the year, by the way. These are all December 31st hedges. So this market is hanging in there like, the wheels are shaking and about to fall off. These December 31st hedges could work out very, very nicely. Yeah, we'll see. So I'll keep a close eye on that one for MES. This one here is a 60-25. This one is not break even, unfortunately. So this is going to be a small loss. That's going to be like that 0.25% that I talk about a lot with my hedges. MNQ, this one's out to the end of the year as well. So if the wheels fall off on the NASDAQ, this is a bear put spread that would give me, I don't know, like $1,000+ of profit for a small, $300 to $400 risk. NQ, what do I got going on here? This is a 1-1-1 strategy. Yep, this is up $200. That's going to be a little income trade by next Friday. The Russell still looking good for profit. That's up $600. Silver still looking great for profit. That's up as well. All right. So futures wise, it's pretty much hedges and some income trades. The income trades are looking good. The hedges are to be determined. The hedges are out to December 31st. The market would have to drop, and this is the purpose of the hedge. If the market drops hard, like 3 to 5%, 5 to 10%, those are big moves for like a very short window to have like 2 to 3 weeks of trading. Anything can happen. I don't know if the Fed's going to do that. Doesn't really matter. But if it does, I'll have some hedges that help me get paid. Okay. As I said yesterday, all I'm really looking for are opportunities to just get better prices. I'm not buying stuff at highs. I'm other than like little dollar cost averaging swings, I'm just going after some income, and I'm doing it all to find risk. I think this market has gotten a little high. Let me check the AAII sentiment. It may not be high because the market still feels weird. As of last week, we're 43.3%. We did get up here a little bit on the 4th to 48. We had the 1-year high at 53. So we're not quite into like the contrarian sentiment where it's like, man, everyone's bullish and everyone's complacent. It's not really there. The fear and greed index, we're probably looking at extreme greed in the markets, but we're still neutral everywhere else. So market momentum has translated into greed. We have stock price strength into extreme fear. I don't even know how that's possible. Net new 52-week highs and lows. Are we hitting lows? That's so weird. Stock market breadth. This is another thing that shows fear because it's such a highly concentrated market right now. We're back into it's Mag 7 or bust. Okay. Put and call options, extreme greed, probably showing a big favorable long side of the market right now. Market volatility remains neutral. Safe haven remains greedy. Junk bonds remains greedy. So interestingly enough, this is neutral. So I don't think it's enough to make a judgment call out of that. Let's go to today's currencies. We're still euro on top. Pound is getting faded. My euro pound might be coming back in a big way here. Let's go euro pound. There we go. There you go, euro pound. Let's get up there and find that 200 moving average. All right. I left off on oil. I know when I was kind of walking through my charts, I got a lot of stuff going on today. I'm operating on like 4 hours of sleep. I'm a little wired. So let me just focus for a second. Oil, I'll revisit this whole idea. The floor is at 67. If we break the floor, I wouldn't be surprised to see a bear trap, similar to what we saw with the dollar. It just does this, right? If we go lower highs equal lows, then it just keeps getting choppy, choppy, choppy. Look, if we fake out and then create a bull pattern, I want to be long oil. Okay, pretty simple. If we actually break the floor, like firmly, so let's say we chop around here and we break the floor. If we pause, I look for a bear flag. If we pause and then slowly retrace, maybe some continuation. Okay. But I just let price kind of dictate here, because if we quickly rip back up above, it's a fake out, and that's a bear trap, and this thing's going to squeeze higher. I don't know how oil prices haven't gone higher, but they haven't. And it's not necessarily global demand. It's just we've got Saudi Arabia, US pumping like crazy. You got the US in 2025 likely back to the adage drill, baby, drill. We're going domestic. And our supply is going to be high. Our gas prices, which I have been talking about, go to AAA gas prices. Okay. I know this may not be a big thing, but if your current average, start to get greater than a year ago, it's probably not a good trend for gas prices. And based on the CPI and PPI we saw this week, the biggest negatives in CPI, despite things being higher, right? The biggest negatives were oil prices and gas prices and fuel prices. So if that starts to get neutral or starts to increase, it's hard not to see inflation continue to go a little bit higher. So the story unfolds in 2025. Gold and silver. Gold is down. Who is active on gold? Because gold is doing exactly what I said. We had a little 9-day range. I just said, watch out for this range. Watch out for this range. And to me, this is still range bound. Right? It's still range bound. So high, low. If this is an equal high and we still hit symmetry, I'm waiting for gold down here. I'm going to buy some more below 2,500. Okay. So these little minor day-to-day movements, this does not affect my gold positioning at all. So I know traders out there that are trading gold and trading, CFDs and trading Forex, and you got like all these little ticks and pips. They all matter. That's not me for gold. I'm more like, what's the bigger picture? Because we've had such a good bull market, I could see gold going sideways. Okay. I could see gold giving us an ABC correction. So either 2,500, which I've mentioned this a lot of times, 2,500 or 2,400, I am going to wait for those levels to then start averaging back in. I'm not interested in this. If it goes higher, GLD will benefit. Okay. My gold futures are still way down here for full expiration. They'll be fine by December, January. I doubt we're crashing on gold. All right. But as far as where I want to get back in, I like gold longer term bullish, but I want to get a better price. And that's pretty much everything in the stock market. Anything in my trading is, if I don't like the price, I don't chase it. I will wait. And even if we did this, look, if we went up again to all-time highs, okay, so I've got GLD that benefits from that. But all I'm going to look for is, okay, I've got a 100 moving average and a 144 moving average and a 200 moving average. If we pull back to those levels, I'm still interested. I know it might be at a higher price than where I wanted it here, but it's still a technical reason for me to get into the market. Every stock I look at right now, look, I don't care if Tesla goes up to $600 and I don't get a trade. I'm still going to wait for a pullback to my moving averages. If Netflix goes up to $1,000 and doesn't pull back, I'm still going to wait for a pullback to my moving averages, right? They're there for a reason, right? They're dynamic support resistance for a reason. So again, it's just call it simple technicals, but I'm going to wait, and hopefully my levels get hit and my pullbacks that I'm looking for get hit. All right. So that's gold. Silver, same type of thing. We've had a pretty decent 2-day drop on silver. It's still very well supported around 29 to 29.50. And hopefully we just continue to show some basing here. Base around 29.50, base around $29. I don't necessarily want to see silver breaking below $28, even though it is also very well supported at 26. But the structure that I have on my chart, you can see this trend line here. This is still pretty well supported. Lots of support on silver. We can still be very supported here. Resistance becoming support. But if we If we hold here, I'm hoping that we just kind of accumulate and then we have another breakout to the upside. And this is target one. 2025, a bull market on silver would be fantastic. I'd love to see a run to, $46 or $47 on silver. Okay. All right. Bitcoin. We had 102,000 yesterday, 102 and change. We're back down to 100K. Same thing on Bitcoin. I'd love to add some more exposure between the 90 and 80K spot price. How will I do that? Probably by just adding more to my wallets and also adding some IBIT exposure, some FBTC, and maybe looking and see what MicroStrategy or Coinbase is at. But most likely sticking with the ETFs, I'll trade IBIT most likely, just because it's a little bit cheaper than FBTC right now, and I can also trade the options. Probably just put in some credit spreads, maybe a debit spread. I put in credit spreads in that one because I wouldn't mind taking the assignment. If I had the assignment and I keep 100 shares or add another 100 shares to what I already have of it, I've got, I don't know what I have. I think I might have 1,000 shares total of IBIT, maybe more. Let me check something here on IBIT. IBIT, I have 2, 5, 9, 11, 15, 16, 17, 18, 19, 20. I've got 2,100 shares of IBIT. So yeah, I'd add some more, but it would be at a better price. Same type of thing. This is another, it's just like everything else I'm talking about. Here's a 21 moving average. I'm not that interested in adding it a 21 moving average. Here's a 50, here's a 100, here's a 144. There's a price level and inefficiency level that I'm looking for. Does it find it? Maybe. Right? So if we break this structure here, maybe we hit symmetry. If we hit symmetry and then break the structure, I'd like to see like an ABC pullback, find me some support. I'll start to dollar cost average in again, and we'll see if we get back to these highs. We'll see if there's another chunk to the upside, but give me a better price. To me, it's that simple. I'm going to wait. Okay. If it goes higher, I have shares. I have Bitcoin. It's a buy and hold. I'll gain from that too. But if I want to add to my position, I'd like to get a better price. Okay, Ethereum hanging out near the recent highs. That's fine. All my trades on EETH should be full profit by the end of the year. I need to stay above $60. Copper, China's this you love me not type move on China. So copper keeps going back and forth as well. Japanese yen, that's futures. I'm going to look to see if I get something in 2025. This actually would be a pretty nice trade. I'm not going to lie. I'd love to take some option trades on Japanese yen futures. I don't know if I'm going to speculate like I did here. I had a nice little run on FXY, and then I had a couple of stacked futures credit spreads, actually debit spreads in this case. But that's probably all I'm going to do is just trade, spreads on it. So we'll look for that one. If that lines up going into 2025, that could be a pretty nice trade. I do have some shares on EWJ. I might regret this. Okay, not necessarily to the downside, but if I started here and I add here, am I getting kicked off, Nick? Or are you joining me?
No, I had to come talk to you. It's been a minute since I've spoken with you. Keep going.
What's up, dude?
I was listening to you. Keep going.
Okay. Well, I was just saying on the Nikkei that I'm trading a little bit of exposure on EWJ, and I'm looking at this as if the Nikkei from where we had that July to August slam, that I do think that the way I'm trading it is EWJ. That cuts out the bottom 15% of the Nikkei 225. It's not highly concentrated, favoring like the top 10%, but it has cut out like the trash. And I think this high to low. Look, I'm gonna take a position here, position 1, and a position 2, which was a 27% discount. So if I dollar cost average into that and the Nikkei gets back to all-time highs, it's like a 20-25% gain on the index, and I'll take the trade. If we go to all-time highs again, then maybe the EWJ works out fine. I'm putting like $3,000 into it. So if I turn $3,000 into like $1,500 profit, that's fine. I'll be happy with that. What else? Argentina. This is another one. Nick, you maybe heard me talk about this one for the week. I like Argentina. It's had a heck of a run. It's been one of the best country ETFs outside of the US, obviously. But It looks like every other stock that I'm talking about. It's not at a price that I want to get it. So it's a cheap enough ETF that I'd like to trade it, but where? Not the 21, maybe the 50, definitely the 100. This 100 to 200 moving average, I will add some exposure to ARGT.
Chris, I popped in here because especially I heard you saying something that really resonated with me. Just an important. These are tough days right now, Chris. I think you're in the same boat as me, where you show up and yeah, I heard you saying, "Give me a better price, give me a better price." I feel the same way with a lot of things right now. My
Yep.
goodness, it's like everything is priced so richly,
Yep.
and the reason I bring that up and reason I just wanted to pop in and chat with you about it is just because it can feel like you're going insane when this stuff is just going up every day. And it's like, well, what am I doing? Not just full porting in the NASDAQ right now. But the thing is, these are also the times where it takes a lot of discipline not to get sucked into what feels like a vacuum cleaner right now. I mean, this market, I go into CNBC, Chris, and it is just adamantly bullish. I mean, I feel like I listen to CNBC because it helps me, just get into a mode of knowing what's going on. They got a lot of people coming on interviews and stuff.
Yep.
Point is, though, I feel like I get on there. I feel like I'm getting sold to buy this market at these prices. And it's just like, I think it's really important to take a mental moment, to take a pause and just say, when you're trading at PE ratios that are similar to the ones that traded prior to major market sell-offs and corrections,
Yep.
you have to just give yourself a gut check and just say, look, I won't be the one to chase this thing. We've been in this business for a long time, Chris, you and I mean, 2021 was a more recent similar experience for many people who are listening right now. The crypto buzz was so hot. It's not to say that these things are not going to have brighter futures ahead, but you have to remember, just because a beautiful house, if everyone envisions a beautiful house, you can still overpay for that house, or you can get it at a good price when the times are better. So just wanted to point out that there's a lot of great value company. There's a lot of companies out there. There's a lot of crypto might have a great bright future, but it also matters what you pay for it. Look how quickly today, I mean, and this may just be a quick blip, but look how quickly, this market can get scared. That's a quick move on the NASDAQ here this morning.
Oh, yeah.
So just something to think about. All morning, Chris, I issued a word of caution to everybody because it feels like euphoria, feels like 2021 again. And, we know how that ended.
Yeah, I mean, Nick, I think that it's interesting how the market is playing this week, where it's like you had the big rip on CPI and then the fade on PPI, and then today is following through with that. We're right back towards the weekly lows on the SPX. We're coming into the Fed next week, and it's going to be, this is perfect, right? It's going to be bottom of the ninth. The Fed's up to the plate. It's a full count. They get one pitch. What are they doing on December 18th? Are they going to help the market get back to all-time highs? Or are they going to say something stupid that the market doesn't want to hear, and down we go? And look, a 28, 29% rally for the year can still be 20+%, right? But it's going to be an interesting spin when the financial advisors are like, oh, the market's still up 20%, but it gave back like 5 to 10% of it real quick.
Yeah.
Well, so
I mean,
it's just sentiment, how it finishes.
Look at this move in 2018. I've been doing a lot of this recently, scrolling back on the chart and just reminding myself and the listeners that markets don't go up forever. Here's a year, 2018 feels eerily familiar. That looks like the chart right now. That literally looks like, imagine that this is the August and May or summer months. Looks really similar. Yeah. And then just boom, boom, boom. And then look how quickly we gave back so much of those gains. So again, I heard you say this the other day. I feel the same way. I am not a bear on this market. I don't see a big bearish catalyst. This was a big trade war freak out. I don't know what's going to take the market down, but what makes me a little nervous right now is just simply valuations. I just see the expectations for this market are so high. Prices are very rich in a lot of things. And that just makes me say what you said earlier. I got to wait. Give me better prices and I might play ball, but I can't do anything with these prices for a lot of indices, sectors, stocks that I like.
Yep. I'm right there with you. And like I said, like if you heard me all yesterday, like I sounded like I was griping and I was like an old curmudgeon and I'm just angry at the market. Like, look, I'm not angry. I'm surprisingly having like income trades every single week or every couple of weeks for expirations. Like income trades doing fine. I was a little caught between like the hedge levels out to the end of the year, knowing that I'm paying for it. And I've had hedges that have paid out this year and I've had hedges that have lost this year. It's like, it's kind of a wash. It was there when I needed it. It helped in August. It helped in April. It might help towards the end of this year, maybe. Like if this market really tips over aggressively, and like I said, I mean, we go 28, 29% on the year, that fades to 22. It still looks good on paper, but it might feel like crap in the last 2 weeks of trading.
Yeah.
And that momentum carrying over. And another thing, as far as like, the tops and like encouraging everyone to buy, don't we have isn't Trump going to ring the New York Stock Exchange bell like this week or next week?
He did it yesterday.
He did it yesterday, right? Okay.
Yep.
I was like, if that's not another kind of sign of this market's getting toppy, because he is a president that's going to tweet or chat or talk about where the stock market is.
Yep.
And I'm telling you, there could be this complete disassociation between real economy and stock market, right? Main Street and Wall Street. We could have a legitimate Main Street recession where inflation is getting higher, everything is more expensive. Again, it keeps getting worse. Housing prices aren't coming down. We're still unaffordable. Borrowing costs are going up. It's that's going to be felt by Main Street for sure. Wall Street, you've got all these built-in mechanisms okay, the stock market's ripped and all these stocks have had all these gains. You also have this buyback program that all these stocks like to do to kind of fluff their price up. You also have mergers and acquisitions. When things get a little gnarly, those that have a lot of money buy those that don't. It's that still props the market up. And so these bull markets, especially before they officially turn, there's these kitchen sink efforts to kind of keep things going. But I don't know what the big volatility event would be to scare the markets off into a big correction, but I'm just braced for it. I just see
Chris,
so
my
many
point
stocks
too with the thing is okay, we don't know what the event's going to be. And the beautiful thing about this is we don't have to be. You just have to know. I've been making this analogy to 17,000 times, but think of a boat, right? If everybody's on one side of the boat, which is right now, everybody's bullish, right?
Yep.
When something comes along, if everyone's on one side of the boat, the torque of that boat can be much more violent.
Yeah.
So it's just one of those things. I don't know what the catalyst can be. I'm not a bear. I'm not saying today's going to be the day it's going to drop. Today's going to be, I'm not doing that. Right.
Sure.
It's gonna have some sort of bearish catalyst. It always does, right? A bear case is always around the corner for the market. You can be one of those perma bears on Twitter and you can do all that and say, haha, I knew it was going to happen. It's inevitable. There's always a bear case that comes out of somewhere. But the point is, when sentiment is very one-sided, we've talked about this a lot on my segments. I've been talking about the put-call ratio almost every day. Put-call ratio is real low. You got a lot of people buying calls out there. Call premiums going crazy, but puts are cheap. And the point is, we don't know what the catalyst is going to be. We don't have to know what it's going to be. We just know that sentiment is one-sided. Be careful, because when that bear case comes along, if you don't have stops in place, if you don't have hedges, if you don't have, you mentioned earlier, hedges have been a frustrating thing this year. Well, that's totally fair, because there's been so much this year that has been out of the ordinary. I mean, we've had 2 back-to-back 25+% years in the stock market. That really does feel like, okay,
3 times ever.
Yeah, maybe it's time to be a little bit more diversified, a little bit more hedged, a little bit more careful going forward, and not let these last 2 years deceive us and make us think that this is the new norm, right? That's the stuff that's top heavy central, is when people start saying, this is the new norm. We're going to see another 20% next year. I think that, the expectations being really high it makes good sense why, when everybody gets bulled up, it is very easy to disappoint the market, right? When everybody is so bulled up, when there's a good, healthy bull bear mix, the bulls can look towards and say, hey, that's not as bad as we thought. There's a little bit more room for error, because people are balanced. Right now, I see everybody on one side. Doesn't make me I'm getting short right now, it's going to go down. It's just that when it goes down, I think it could be pretty rough. I think it could be pretty quick.
And as you mentioned, protection is quite cheap. I did I've got a 608 by 590 bear put spread on the SPY. It cost me $4 for an up target of $18.
Wow.
You can get 3-to-1, 4-to-1 payouts. And again, my timing might be crap, but if I'm right, I mean, right now it's I'm positive $2 to $3 on my $4 position. I'm already up 50%. But I'm going after a big win. I want that hedge to be something that helps me, offset some of the inevitable drawdown that happens if we do pull back to, the 50 or 100 moving average. I mean, this is an interesting spot to be going into next week's trading, because we're on the verge. I think this is a key level. This is a key level. If we're sitting right at it going into next week's trading, I would say that Monday to Tuesday, surprisingly, would be like quiet days, and it's all going to be about the Fed. But it's our last full week of trading, so there could be some really wild stuff happening. Are we? Do you want to do? Are we doing a FOMC session on Wednesday?
Yeah, for sure. We'll
Okay.
we'll definitely make a show
If
out
you
of it.
if you want me to jump in, like I'm happy. I mean, I'm watching just like everybody else, but
Yeah.
price action is going to be, I think, pretty wild. It could be like a giant volatility nothing burger, but man, it's like it's the last major catalyst that I see between the Fed and the BOJ. BOJ is probably more Forex exposure, but man, the Fed this year, the stock market. I mean, now that we're just a little faded off these highs, I mean, it's 57 all-time highs is pretty darn good. But
Yeah.
can we get to 58 or 59 or 60 with those last 2 drifty weeks of the holidays? Maybe. Like the Fed could kind of set it back in motion and say everything right to reassure the markets, or Jerome Powell could be honest and be real and say that inflation is not going the right direction, and they're going to have to consider maybe pausing more in 2025, but they won't. They're going to say the same two-sided stuff they've always said, and it's up to Price to kind of interpret what we're going to do.
Yeah.
So, but it's going to be interesting next week.
I mean, yeah, we'll definitely be doing we'll definitely do a show, and you're of course always we look forward to having you on, of course. For everybody who's hanging out with us, guys, do us a big favor. Chris Pulver is a regular show host here on the A1 Trading Show. The other thing I want to mention is Chris Pulver also offers his trades inside of our Discord channel. If you'd like to get access to those, the Pulver alerts, send us a DM on our website. We'll be happy to set you up, get you some information about that, or you can go to a1trading.com/pulver-alerts. Here's the information there. Or you, again, like I said, you can speak directly to our support team, and they can get you set up with a membership. Chris, thank you for coming on. We'll maybe just call it good unless you want to keep going. I mean, you're welcome to, but
I wanted to leave. So just in the spirit of this week, I would like to leave everyone just this. I know we're going to talk about this more next week, but I do think that 2025, look, Nick, every year is never easy. Every year, right? Like if anybody thinks that this is easy, at some point, that's the person that's never seen the other side of it.
yes.
So, I mean, I this week was kind of my public service announcement to all the traders that had the experience of 2020 and 2021, and they killed it, and then they all disappeared in 2022 because they got killed. Like they got smoked in 2022. It feels a lot like that same type of setup, is that we're building up for all this, like can't do anything wrong. The markets are going to rip forever. Dude, these levels and these valuations, reality has kind of gotten loose, and I'm just playing it cautiously. I'm not bearish, like same thing. I mean, I think it's on the same page. Like I'm not bearish, but man, it's like there's so much more risk and faster risk to the downside if this market just doesn't have everything perfectly spoon-fed to it. Like if this market has a little bit of a tantrum, we could see 3, 5, 10% real quick. So just be cautious. That's all.
You give me that 10% pullback, and I'm probably back in the game. So it's not that you know what I mean. It's like not that's a good evidence of if you're really bearish, you're like 10% is just the start. It's going to go much further than that. And so, we'll have to see, but playing it by ear, staying one day at a time. And Chris, thanks for coming on the show. Appreciate it, man.
For sure, man. Thanks. It's nice to talk to you. It's been a couple weeks.
I know. I had to jump on. I saw you. I was like, this is the perfect time. This is a good mental check to just kind of get back on the same page. But anyways, guys, thank you very much for watching. Chris, shout out. Thanks for coming on, and everybody have a great weekend.
Bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.